Good afternoon, everybody. I'm Jonathan from Association of Malaysia. I'm their current secretary. I'm also a corporate partner with Ibrahim, and I oversee the Fintech portfolio firm. So with me this afternoon or this noon, I have Salim, CEO of BigPay. I have Mayin, Green Packet, and Farah from IBFC Labuan. So it's quite an interesting mix that we're going to be talking about the impact of digital banking to the industry. And I guess before I kickstart, maybe I can have a go around and have each of you introduce yourself a little bit, starting with Salim, Mayin, and then Farah. Yeah. Okay.
Sorry, you guys, Jonathan, you froze for a second. Were you looking at me just to start?
Yeah, sorry. Yeah, to start. Salim to start.
Oh, sorry, because it's frozen, so I might have to switch Wi-Fi in a second. You know, like an online conference wouldn't be complete with someone cutting out of internet, to be quite fair. Salim Dhanani, CEO and founder of BigPay. We started this company in 2017. We launched in 2018, and the intention was to create a digital neobank across Southeast Asia, with Malaysia as the launch pad. So we're really, it's really our engagement tool, and our intention is to grow that out across the region with different product lines as well as different markets. So when it comes to product lines, we've launched instances. We're launching lending in about a month and a half. And the next step for us is to investments track as well. Thank you, Jonathan.
Hello, everyone. Afternoon. My name is Mayin. So I head the consumer and SME fintech division from Kipple. So Kipple in Malaysia, we're very different from the other e-wallet players that are on to target the masses. So Kipple played in niches from the start. So we're always looking at serving one communities at a time via B2B2C model. Our transformative purpose is to add financial inclusivity, impacting every Malaysians. And we do it our way of looking at each niche communities and turning them into a cashless ecosystem from a digital and fintech perspective. So nice to meet everyone online.
Hi, I'm Farah. Thank you, Jonathan, for this opportunity. Thank you, fellow panelists that I've not met before till today. I've not had the pleasure, clearly. I represent the Labuan Financial Services Authority, the Labuan Internal Business and Financial Center. And my role is really to develop the jurisdiction, market the jurisdiction, and try and get our message out there as far and wide as possible. So we are Malaysians' mid-shore center. And we are extremely digital friendly. We don't believe in sandboxes necessarily. The ethos is that digital is not, digital is just an alternative way of processing, whether it be financial, non-financial business processes. And that ethos has really taken us quite far. So yeah, I look forward to sharing a bit more with you soon. Thanks, Jonathan.
All right, great. Thanks, everyone. So yeah, let's just kickstart with our final session today on the impact of digital bank to the industry. So I guess for the past 2 years, there's lots of hype when it comes to this digital banking space, right? We had the likes of players like Monzo, players like Starling in the forefront, and that was on the European side of things, the western side of the continent. But then back here in Asia Pacific, we have WeChat Bank that was quite robust as well. Then it started to trickle down to Southeast Asia, and then we have HKMA coming out with their own digital bank guidelines. Of course, MES was following suit. And I remember those days, I think, together with Farah, we were talking a lot about digital banking initiatives in Malaysia. But these two terms seems to create some confusion these days. Digitizing a bank and a digital bank seems to be catching up in our Malaysian lingua, but somehow or rather, I don't think the entire community is very clear about what's the difference between digitizing a bank and a digital bank. Yeah, maybe I can have the two payment players to just share a little bit of insights.
Sure, I'll take that and run with it. So digital banking licenses. So I guess it's a great PR tool, as well as way to show. And actually, look, I think there's a balance, right? I think as a regulator, and Farah, I run the risk of perhaps boxing all regulators as one. And I know LBFC is actually quite innovative in what they're doing as well. But if you look at these regulators, showing that you are willing to foster innovation, and at the same time you do need to still keep a handle as a regulator on on the core tenets of your responsibility, right? Of securing the financial system. And the digital banking licenses are one way to do that, right? I think what you were getting in with HKMA was a whole bunch of lenders, originating. You've got tier 2 capital flying around everywhere. You don't really know where the money's coming from and where ownership lies at the very end. And then you also want to be able to create a space where that capital is being regulated by the actual regulator itself. And I think we've seen that trickle down into Singapore, and I think that you have different ideas, in terms of it was telling when you saw MAS have consumer licenses and trade licenses or wholesale licenses, and that was very, very interesting in terms of how MAS sees the role of digital banks across the region, and Singapore is always one of the countries that's choose my words carefully here, that's wanted to have an influence across the whole region, right? And so I think the digital banking is an extension of that foreign policy. And I think I'll digress just 1 second and say that digital banks and banking regulations are political. And as we go into Malaysia, I think Bank Negara, is also trying to foster innovation. We've seen this on a number of different fronts, whether it be eKYC, digitalization, whether you look at the e-money licenses that have been given out. I mean, it's better to have 40, e-money licenses than have 2, right? And this is the argument I would say. I mean, yes, I don't think they're all efficient, but at least it's good to have more. Going back to your question, I think that digital banking licenses will create innovation naturally. Will all 5 or all, in any market survive, or 8 in Hong Kong, whatever they are in Hong Kong? I don't know. I think some will face the calamities that we've seen in Europe and also in Australia. But fundamentally, the ones that understand why they're going for a license will win. And that comes down to understanding, the efficiency that can be gained with the bank when you are at the right size, and having the right cap table, having the shareholders that understand that vision as well. And it's not just about calling yourself a bank, but actually becoming one. I think those guys will win. So, and building it from the ground up is different than digitizing a bank. Not to say it can't be done. It's not just a tech stack. It is culture. It is understanding that you are tech-led and really debating those decisions whilst having the right governance. And for me to say that fintechs have found the right balance, I can't say that. I don't know. I think we'll see. The proof will be in the pudding.
Yeah. So, Jonathan, maybe I'll add my point of view on that as well. I think why it's confusing for both digital banks and digitalization of the banks, it's because both actually to use technology to lower barrier for customers to access financial services. So if you do that on a digital layer and technology layer, it looks like it's the same. But if you look very deep into how both serve individuals and businesses, you'll see that the difference comes up very clear in 3 areas. The first is in profiling the users, the end users. Number 2 is the way the end users interact with a digital bank via a digital bank or a bank who is digitalizing. And the third is services, right? So if you look at Bank Negara's guidelines, a digital bank is meant to serve unbanked, underserved in some of the bank, and underpenetrated, right? So if we look at point number 1, profiling, while a bank may look at ways to onboard a customer a lot more differently so that they can do to get to the customers the widest and quickest way possible. So they use digitally generated methods, apps and web apps to onboard customers. A virtual digital bank needs to shift from reach to relevance, because these customers are very different, right? So I give an example, SME financing. it's going to look a lot more different between a bank who is digitalizing and a digital bank. A lot of the SMEs that a virtual bank would serve would have very little, let's say, documentation at the start. So the banks look at them as a risky segment. But the digital bank actually would need to look at non-bank data, right, to assess risk and relevance to serve these SMEs in terms of financing. So digital banks need to look at traces digital information that these SMEs leave in other platforms rather than banks. They look at SME subscription services, their day-to-day tools that they use, like accounting, payment gateway, online, e-wallet, right? They look at all these data, study these data, so that they can predict what these SME want to do. How do I help them grow and scale? And then form that offer that's relevant to them, right? And then we move from interacting in a different way to these SMEs. We don't look at launching a bank app or doing a web-based digital loan. It looks at channel transformation to moments of truth. It looks at these data so that I can target the SMEs at the right time, the right frequency, the right messaging at the channel that they are in at that moment, right? And I think the last point that differs a digitalization of a bank and a digital bank, it's in the products. Banks looks at banking products. Digital bank looks at microservices, right? So we don't look at loans as a digital loan product. We look, digital banks look at SME financing as microservices that helps SME get cash, small working capital quickly, because they need the money right now, in a month, in weeks, in days, to quickly launch and survive in this very tough environment. And while we get the funds in for the SMEs, the microservices help the SMEs actually manage their cash better, visualize their cash better. What is the cash in, cash out? How does expenses look at that for that, and help them manage their entire business operationally better. So that's actually the difference between the bank and a virtual bank from our perspective.
Okay, thanks, Salim. Now that brings me to my next thought and my next query, right? In a sense, I think Salim, you mentioned it. Yeah, HKMA looked at it in a local demographic whereby it was really converging a bunch of lenders at the end of the day, right? And then after that, you have MAS looking at consumer and wholesale, but again looking at the demographic and the banking system, or the sophistication of I guess financial services in Singapore itself. It's a lot more sophisticated than it is in Malaysia, to a very large extent. But maybe catering to what they are doing, it may make a lot of sense to a consumer vertical, and there's also a consumer a wholesale vertical at the end of the day. But now, I think what May was very much localizing digital banking to our local demographics in a sense. And I like what May just shared in terms of it needs to be consumer centric. The way we look at profiling is going to start being different, and I think that goes the same for HKMA. It goes the same for MAS at the end of the day. But my concern, maybe not a concern, but maybe thoughts from everybody in a sense whereby would creating this so-called integration, or a little giant that really would have a payment rail, will have a lending rail, eventually squeeze out the current fintech players, whereby you create further imposition or more stringent regulations that will come in for e-wallet players at this point in time. Because to a certain extent, I guess if I hear Main correctly, the e-wallet players will have certain data that she was mentioning about when it comes to profiling, right? Then you will have also the ECF boys that again will have similar data in terms of how we're going to be funding, how we're going to move forward. The P2P players also would have a different segment. But introducing a digital bank seems like we're putting everybody under one big umbrella. What are your views? Do you think regulation is going to change? Do you think players are going to get squeezed out? How do you look at it in the industry?
Yeah. I'll take that just because you mentioned my earlier comment. So I'll start. I think naturally, yes, over time, we will see some level of convergence, especially when it comes to the oversight overseas industries. But I think it will take time. I think that actually the best way to do it, and I think where some regulators do go out better than others, is kind of being slightly more laissez-faire in terms of how players and actors launch products and how they decide themselves to protect consumers with the regulatory frameworks at hand today. Over regulating non-bank players like banks or having too much convergence can lead to large issues where you're not actually achieving your goals, because it is up to digital banks to perhaps, how do I say, professionalize or rather, I should say, kind of capture market share from an efficiency standpoint, but not necessarily be the pioneers. Digital banks, a lot of the people, if you look at the applicants or the rumors of applicants, I guess very few are formal at this point, but, a lot of these guys are existing players, and they've already carved out a bit of a niche. So now it's about kind of optimizing the ability to distribute products. And I think, Mayen, it's exactly as you said, that different mentality has led to the distribution to this particular segments, and the digital bank is allowing it for it to be optimized now. To constrain it too much would be and having too much convergence relation, and my perspective is that you would actually prevent this cycle happening again, which is not actually what you'd want, right? You'd actually want to continue this, and perhaps in the future, these players don't go for digital banking licenses. Maybe there's consolidation. There are other ways by which bring them into the fold, and you have optimization in the market itself.
Yeah. So maybe I'll add on to that, Salim and John. I feel for fintechs, banks, digital banks, upcoming, the 5 that would win a license, or 8, right? It generally needs to be all of us working together. Okay, so because of these 2 aspects. So if I go to a bank today, as an end user and as an SME, I go to a bank primarily to serve my long-term financial goals and needs, right? So it's a long-term relationship with the bank. Fintechs actually have a much shorter relationship. We are not about that long-term relationship, build your savings. We are about your short-term financial goals, right? If you're a student, you're an SME, you come to fintechs because you very quickly need to get a solution to an imminent cash problem you have. So you come to a fintech. So fintechs serve short-term financial goals. I think a virtual or digital bank, it's kind of in the middle, right? So it is like a fintech because it's meant to serve a short-term financial goal. My goal as an SME is to get cash in 2 weeks. My goal as an individual underserved B40 segment in Malaysia is to get enough aid for me to survive day to day, right? That's my short-term goal. But from a digital bank point of view, you need a bit of regulation there, because now you're dealing with bigger things rather than the fintech apps, right? So you are actually now a bank. So a digital bank is actually in the middle. But all 3 of them will continue to serve their very niche, very specific segments on all 3 fronts: long-term goals, short-term goals, and digital banks serving in between, both on a regulated environment, but from a short-term financial perspective. So that's mine.
Jonathan, just to add to Mayen's bit, right? I mean, yeah, so there are different ways to skin a cat, right? And obviously in financial services, everything the panel has talked about so far is very much customer-centric, and this is the way fintechs work and digital, and I love this ethos. But in the real world, right, you're looking at wholesale retail. What we've discussed so far is different verticals within retail. When you talk about HKMA and you talk about MAS and you talk about Negara, there is a domestic element that is involved here. When you talk about a jurisdiction like Labuan, we are completely wholesale. And that's why we're able to be very forward-thinking in how we look at stuff. We don't have to necessarily be concerned with the domestic sub-verticals, so the SME, the B40 and all the rest of it. There is another layering of international, global, what I call piping, that needs to be digital as well, right? It's not just about that retail space that we all seem to be fighting over. The big money is in that wholesale space, right? And in that wholesale space, you can be a lot more laissez-faire. You can be a lot more open. Now, if you go back to this issue about wallets, gateways, all the rest of it, those are, again, right, sub-verticals of what an entire bank can do. Now, when you look at an entire bank or bank system, you have to worry about peer-to-peer, jurisdictional to jurisdictional language. And this is where this issue with regards to the FATF and the VASP comes in, right? And I know a lot of fintechs at the moment are looking at it and going, that's not my space. But you know what? It's going to come back and hit you very quickly because it's hitting us now in wholesale space, right? So we're looking at situations where you have the GDF talking to FATF and APG about the VASP rules and how really what they're trying to do is mirror SWIFT. And we all know how efficient SWIFT is. This is exactly what we don't want for this industry, right? The industry needs to be able to stand its ground and prove to these supra multilateral regulators that my regulator then adheres to, no, we know what's going on within the system. So yeah, the domestic digital banking license is one thing, but I think the real change is in the wholesale banking system.
Right. That actually paves my next question, actually, and that specifically goes to you, Farah, in that sense, whereby I think equally Labuan has also issued a digital banking guideline, and I think there is a lot, or there were some media coverage about it, and but the way media has been covering it has been rather vague as to how this digital banking license has been coming about. And I guess that goes back to how the similar DEX exchange guidelines was also issued in Labuan, and I think Labuan getting enough media space in that sense. So maybe what I can trouble you is to maybe share a little bit more to us about the difference between the current the licensing framework that Bank Negara has issued versus what one has recently issued as well.
Right. So what I call jurisdictional regulators, Negara, MAS, HKMA, all the rest of it, focus on the jurisdiction. Okay, and this is where I just want to, before I go into the license per se, I want to talk about the ethos, the philosophy behind it, which is very, very important to understand. Number one, it is not about the jurisdiction anymore, right? So there is a natural convergence between digital, and I don't say fintech, because fintech is that and digital is everything else, right? So when you look at the digital world and the disrespect, and I use that word very, very loosely, to borders, okay, the inability to control digital technology in a border, whether it be fintech or Netflix or whatever, is also very clear that pattern is very clear in financial services as well. And this is where mid-shore jurisdiction like Labuan comes in very nicely. If you're looking at the B40, the domestic SMEs and stuff like that, that's one thing. If you're looking at qualified investors, then a platform like Labuan will allow you access cross-jurisdictionally, right? That is important to understand. So yes, we have been very forward-thinking in how we have looked at the digital space, okay? And it's been very tough. Personally, it's been very tough for me. I've been in financial services all my life. Moving into this digital space has been mind-bending, okay? We accept that digital processes is an alternative process to box standard processes. We accept that banking services will evolve the same way everything else will evolve, and that digitalization is just an enabler. Now that is the ethos that we have. Based on that, and I know the digital banking framework that got that media that you talked about, that press that you talked about, that was issued in December. But actually by December, we had already licensed, as it stands at the moment, we already have 6 digital banks, okay? There are 2 types of banks in Labuan you need to understand. Number one is the commercial banking license. These commercial banking licenses are, at the moment, 50 odd banks, 55 banks in total in Labuan, okay? Which are then divided into 2 types. Number one, commercial banking license and investment banking license. The commercial banking licenses require to be already regulated in a competent authority in somewhere else in the world, and you have access to deposit taking. An investment banking license has no deposit taking access, and you don't need to be licensed anywhere else. So a lot of the startups are looking at the investment banking license as an avenue to get a digital banking license. And then with regards to mandate or client deposit, they have a back-to-back agreement with another institution, okay? So that really is the difference. I mean, our first, what we got a lot of press about was the fact we in Malaysia, basically, were the first regulator to have licensed a digital bank, i.e. the China Construction Bank, which is the second largest bank in the world. Now, the reason that came about, even before the guidance was issued, now be clear, even before the guidance was issued, that came about because we had a request from Beijing saying, and I mean, at that time, it was maybe 2 years ago now, they were busy with the PBOC coin, and they are one of the banks that spearheaded by the Central Committee to push this, and they were digitizing everything. And so the regulators looked at them and said, okay, you know what, we had the president, the CEO of China Construction Bank come to Labuan. We went through their business plan. It's not a walk in the park. I have to remind you, it's not that simple. But yeah, we were the first regulator in Malaysia to issue a digital banking license for CCB. Since then, we already have 4 operational, another one in the pipeline, and they are not necessarily all Malaysian. Some are Malaysian. So we all know Lee Kim Yew's got a bank in Labuan. That's a digital investment bank. We have another investment bank in Labuan that is backed by one of the municipalities in China. We have another one that is part of the Gen Group that started out as a token business. Okay, so this is the interesting thing about Labuan. You can issue a token, you can have a payment gateway, you can have a money broking license. So, but it's all very wholesale. And that is something that I really want to highlight. I don't know if I've answered your entire question.
No, I think definitely you did, in the sense whereby there is quite a clear demarcation as to Labuan's approach compared to where Bank Negara is focusing towards at this point in time. And I guess when you look at it, and it's what Salim actually raised in the early start, to a certain extent, of course, banking licenses all around the world could be politically driven to a certain extent, whereby we have to weigh upon the stakeholders of the nation and what's best interest for Malaysia at the end of the day. And I always take my hats off, and I will commend Labuan for being very, very progressive, especially in the crypto market. As you mentioned, you had a couple of players who started off with just crypto, but that leads to perhaps a different stream of discussion that we might have in terms of digital identity and FATF's concern in terms of having a passport between crypto and crypto VASP players at the end of the day. So I'll take that with you, and Tasha, maybe we'll do a session together in that sense. But coming back to onshore, coming back to where we are, I like what Main shared about consumer profiling and catering to these segments. But I think one pain point that most perhaps traditional player and local regulators and certain parties or entrepreneurs are looking at is that the path to profitability. Because central bank seems to impose a stigma saying that you must cater to the underserved, must cater to the unbanked to a certain extent, right? Of course, that spurred the Fintech initiative at the start, right? Parties that are underserved, unbanked was where Fintech came in and started growing rapidly. But this seemed to be a focus segment of Malaysia, and maybe I can get the views of Salim and Main again in terms of how do we juggle that? Because there's the stigma that people will say that there's a reason why regional banks don't go into this space. That's one. The other segment would be, before digitization, we always have this trouble about digital education, which is more important, to get the players educated first before you could even introduce a product, right? And of course, we're not talking about the Gen Zs or the millennials. We're talking about perhaps the Gen X or baby boomers who perhaps look at a screen and freeze because they don't really know what to click at the end of the day. Yeah. So, some thoughts from you guys.
Yeah, for sure. But I just before I go there and answer your question, Jonathan, I just want to comment on Farah's point, and I think that's extremely relevant when you talk about the different approach of regulators. Like there are multiple revenue pools, and the revenue pools globally around wholesale and perhaps, dare I say, fringe, are actually slightly a lot more lucrative and a lot more interesting. And if the right players can, and with the right regulatory support, those kind of constructs can be created, you actually have a very winning solution. And actually, I think you touched on it. They're two very different purposes, and I think it's actually really good to see that us nearshore or midshore and kind of onshore having those different solutions can actually together help Malaysia be quite a strong player in Southeast Asia over the next 10, 20 years, as opposed to just the next 3 years, right? So just that's a comment on that, and it's not lost, and it should not be lost on fintechs, the value of having those different licenses. That's the first point. The second point, to answer your question, there is a balance, right? Like I think it's all okay. The official answer is, well, banks have old sticky unit economics, and they you can put a wrapper around something, but if the underlying what's in the wrapper, what's in the box is still garbage, unfortunately it's just creating noise, and it's just a pretty picture. Now, I think that what the whole premise of fintechs, I look, there's 31 people. I doubt there's any bankers on this call, so I can be a bit more open. Apart from the panelists, of course, right? Like, I don't think there's anyone else. So I think, when it comes down to, like, I think the fintechs, the core premise of tech and fintech, whatever way you look at it, and like the only way you win in this industry is that if you can leverage your tech to do two fundamental things. And I really believe that if you don't have this as a fintech, you're not really a fintech. The first thing is leverage your tech to actually change, actually three things. One, leverage your tech to change the way you run your processes from the very core, your operating costs. So then your cost acquisition to lifetime value, your CAC to LTV, actually makes more sense to go and target different segments, right? That's the first thing. And I think that's important to say because ultimately, whether you max out your tier one, capital allocation, going to tier two capital allocation, there's going to be segments at which that kind of optimization curve changes. Yes, you can still make money, but it's not going to be as much money. So why would I allocate my capital to where I make less money? And that's typically as you go down to different segments, right? So, and if you look at the consolidated capitals of banks, they often have a say of which, how much money that you're making, and they're dividend based. If you look at most shareholders, they're looking for dividends. So typically this is how banks behave, and it all comes from one place. The idea of fintechs having lower operating costs, so the theory goes, allows us to be able to to sustainably target the different segments of the population and still make money, right? And where the banks can't play. The next thing is using the same, I think, towards Mayin's point, is like using getting that risk, understanding your risk, and using the data to really. And this is proven, but but there's still a lot of unproven side to this, right? I just want to highlight this. It depends on the data you actually have and the segments that you're actually going. Like, it's not a crystal ball into whether your risk losses are going to go up. Like that, I think just want to highlight that. And every banker loves to say, yeah, but you know what, like, it's all behavioral, is all theory. And it's like, well, actually, no, it's not. Theory, but it's also only proven on certain segments. And if you can really like understand your customer properly. So that's the second pillar of fintech. The third thing is culture, right? I won't name the bank, but we were getting an NDA done, and it took me an NDA, right, a month and a half, because I had to go through compliance checks. And I don't know what to say. Like, I just don't know. That should give you the story about culture, right? And I'm not saying there has to be a balance between the light regulations that perhaps a lot of fintechs have and going into a full bank, and how that's operationalized. There's got to be some level, and that's why the compliance officer that you hire is going to be the best investment you ever make. If you hire the right one, it'll enable you to. It's an enabler. If you don't, it's a hindrance. And I think that's an important point to make. all to say, in summary, there is margin to be made. There are sustainable business models, but you have to be very intentional about what you're going to do and how you're going to monetize. And I'll stop there.
Jonathan, can I just say something to what Salim was talking about? And I think there is this space that's missing, right? In proportionality in regulations, right? And I think a lot of regulators, it's great to have the bells and whistles of everything, but that's not how this business is going to morph. And when I say business, I don't mean the fintech or digital business. I'm talking about financial intermediation. It is the last piece of this entire digitalization of the world that we live in. The Food Panda guys and the Grab guys have been doing it forever, right? We are like, financial services is like the last bit that is resisting. And what's important to understand is that there is a middle ground. Regulators need to understand there's a middle ground first. Players need to appreciate that there has to be regulation. So when we first started this journey, I would call it, nobody wanted to be regulated. Everyone was like, oh, I need to be licensed? No, I don't need Labuan. I'll go to Seychelles or whatever. Fine, go. Now, everyone's like, can I have a license, please? And yes, I will expose myself to you. And, there is a maturity I've seen in the last 3-4 years in this space. I think there has to be an evolution. I wouldn't say maturity, but an evolution with regards to the regulators. And like everything else in life, there has to be a middle ground and they're coming together. And that's the only way this will work, because if not, the fintechs might take over the banks or the banks might take over the fintechs, and that isn't necessarily good for the consumer.
Yeah. So John, maybe I'll add one last part to this. So yes, the standard answer is digital banks will operate 30-50% lower cost than traditional banks. We don't have retail, we don't have physical footprint, so we should operate really agile. We just need a small team to go forward. So efficiency, like Salim mentioned, it's right on the spot, it's there. However, we're looking at the long tail, right, of Malaysia. 80-90% of that underserved, underpenetrated segment. There is volume. The volume, so attacking the volume could get us to the path to profitability. There are digital banks out there outside of Malaysia that is profitable within 3 to 5 years. So the use cases are there. So one might argue, yeah, because they're in China, right? Look at the sheer volume of people in China. That's how they get profitable. But actually, the answer wasn't in that because China is big enough to get the volume. It's because China, the digital banks outside Malaysia and China, they didn't start from a bank perspective. They started from e-commerce, right? The long tail was e-commerce. It was the youth who first get their first job and their salary paycheck. It was that niche use cases that they targeted that brought the volume in. So I think if coming back to that point, right? So if we are able to target the volume of Malaysia, we'll be able to get profitability. Then your last question would be, but that volume, it's huge risk for Malaysia, right? Banks don't touch them for a purpose, you said, right? So why fintech, why digital bank? So I think just to sum it up, it is in what Salim said, it is using parameters that the bank don't understand to reduce that risk. There is learning in AI models, in machine learning models that we've seen out there. We have talked to AI engine vendor providers that tell us banks are looking at data a year ago, right? Okay, apologies if bank people in this group, but banks are looking at past data that could be inaccurately profiling these users and therefore are still seeing them as risky profiles. Yep. But actually, if you look into what they really want, that small working capital, there are clusters of customers that need serving, and if we are able to get that working capital fast enough to make them ensure that they grow and scale, that 80% of Malaysia will then grow and scale. They will demand more services, they will buy more, they will scale more, right? And when they grow, the individuals grow, because SMEs are individuals as well, right? It's the mom and pop shop, it's the hawker, it's our day-to-day, it's our Malay segment, right? So That's what we need to do, like Salim said, balance risk and relevance of Malaysians, but use our brains, tap our brains together to find out the perfect way to manage this ecosystem.
Right. Okay. Yeah. Thanks, guys. And I think coming to Farah's point, and I think we've always been bouncing on this, and to a large extent, I completely concur, because in any event, when it comes to technology, when it comes to digitization, innovation has to always run faster than regulation, right? That's always the maxim that we hold on to. But there needs to come a point whereby regulation comes in, because then it would safeguard muscling up by other more dominant or more higher liquidity players that could just cannibalize other players who are just starting out at the end of the day. And that's the whole purpose of regulation to a very large extent. And on that note itself, yeah, I hear both Salim and I hear Mayin as well, in terms of having a very consumer-centric, behavioral-centric kind of approach, and taking into account like China. But one little stigma I do share is that if we look at the China demographic, the China demographic actually skipped the credit card era when they first started opening up, right? We were very happy with our little, 3 inches by 4 inches tabbing little card that we run around, plastics and all. But China's whole entire era, and because I guess when they first started out, UnionPay was just not sizable enough to support the entire China market, and that came about the QR codes, and that came about e-commerce. And perhaps, yes, I agree. You have players like KakaoBank in South Korea that is thriving really well just by deposit taking and very limited centric kind of approach. But the thing here is that, as both of you shared, and as both of you were sharing about the requirements of depending on technology, perhaps let me use, lack of a better phrase, an AI or machine learning algorithm that picks up trend. That part of it is very determinant on the metadata installer, right? The algorithm is set by you guys in that sense. And that leads to the next question as to, if that is so, are there sufficient safeguards? What do you see as an issue to ensure that risk profiling can be minimized, trending? Because if I hear it correctly, I think traditional banks won't go into the digital banking space because it takes too much manpower. There are a bunch of institutions today. And digital banks, perhaps I would say that will be best run by family offices or young startups, which is willing to go down to the ground and understand the behavioral patterns of the consumer at the end of the day to scale, right? So in that context itself, of course, we are arguing when it comes to virtual assets, when it comes to traveling passports, digital identity and things like that. What about digital banking space? If we're looking at the SMEs, the market care and the mom and pops, right? What happens? As a lawyer, I'll look at it, bankrupt an individual, we have raised the ban to RM 50,000. But we're talking about micro lending, right? The 5,000 to 1,000 ringgit. The recourse is so, it's almost negligible. And to hire counsel, even though I'm in the profession, it's not worthwhile hiring us, and even if you give me like 1,000 files to do, it's still not worthwhile for entrepreneurs or digital banking players to go and retrieve these funds. So how do we balance? What are the safeguards that you guys think is important to be implemented in that sense?
You've raised so many points, Jonathan, in that 5 minutes. I just want to start off by the first thing saying I don't think regulators are, and I'm sorry for in advance, that are thinking to block. The reason for regulation is to block tech giants coming in. By no means do I think that's it. I think it's to save consumers, and actually in some cases it's been to the advantage of large tech players and tech titans coming into the financial space. I mean, we're seeing it evolve in Southeast Asia. I mean, the award of Group having a license, I mean, that must have really pissed off DBS, right? But all to say that you saw that with PSD2, with the ECB. You saw that with the replica of PSD2 and with the FCA and the SAR, payment systems regulator. So I don't think it's there to. I think it's that's a nice story, and I don't believe you, Jonathan. Sorry. I wish that was the case. but I do think we should help young entrepreneurs and other companies.
No, Salim, I didn't say that the regulators are using it against the fintech. I'm saying the regulators are accustomed to a certain level of ultimate regulation.
I agree on your point. I'm talking about Jonathan's point. Yeah. But
okay.
I agree with your point. Yeah, for sure. I mean, I think that makes sense. To your point on having a level of even playing field actually just enhances the whole industry, because it means that you can actually trade globally. You can actually create the solutions that you need to do without having corresponding, blacklisting your entire jurisdiction. But anyway, that's a different story. I'm going back to questions. Sorry, so I apologize.
We're not going to go there. Sorry.
No, so all to say, I think that banks, I think as a Mayan, you mentioned a lot of points around embedded finance, and contextualization of finance and distribution of finance, and you get a lot of different data. So I mean, Jonathan, if I repeat your question, you're saying, is there a way to use this tech? Is there a balance between using all data, all information possible, and being able to manage your ultimate risk on the other side of it, right? If I understood correctly. Let me tell you a story about a Kazakh bank, just for just 1 second, right? There's a Kazakh bank run by Georgians, and it won't take you long to figure out who this bank is. And it was like the number 20 bank in Kazakhstan, believe it or not. Yes, Kazakhstan has 20 banks. And they bought the bank, and they changed it around, turned it around, and they turned it into a white goods lender. But to be able to get a fridge, you had to put down the names of 4 people in your community that would vouch for you. And that data, this is one extreme, and they would capture all the data on all these people, and by giving them access, they have to download the app, they have to get access and kind of authorize it, and then they would start ringing them if you didn't pay, and that community shame, right? So those things, that end of the spectrum, need to be regulated. Having said that, on the other side of it, I would say as much data as can be used and can be given by can be gathered by a financial institution by whatever means fit, but within the GDPR or PDPA data regulations, should be allowed, because ultimately that's how you level the playing field, right? And use all the cool tech that Mayan's talking about.
So, John, I think it's so. Of course, there are a lot of data that these individuals or SMEs are leaving traces behind. A lot of it, when we look at, say, example of a credit facility, we're inferencing the data, right? So we're learning along the way. We're forming insights based on these raw data that we've collected. So basic information, but understanding from their usage, behavior, and data to come up with our own insights and prediction. So we're not really taking your bank account statement, crawling through all that to come up with a credit facility for you. We're not doing that. We are looking at pieces of data. We are forming guided or intelligent insights from yours, and offering them an offer, giving you an offer that we think meet your needs. If you accept the offer and you thrive, and we see improvements from that offer, then we use that inference to target another cluster, and so on and so forth. So we don't believe in using a lot of PDPA data. The PDPA data is sometimes required because you're a bank, right? So we still need to go through certain collaterals. But it's a smarter way of doing inference of that data, and that's why AI and machine learning, like we said, it is the core of it, right? So so that's my take of it. We do hope Bank Negara cut fintech some slack. It's yeah.
I think that goes to Farah's point of having a proportionate regulation.
We are, fintechs are compliant. We submit a lot of papers. We test the apps in and out. KYC, we comply to the framework. We submit to Bank Negara. Move a little bit faster for us is what I'll ask of Bank Negara. so that we can help the underserved segments of Malaysians more. We promise to be good boys and be compliant. We keep ourselves in check because, to be honest, we are holding people's money. And if there anything bad that happens, the people that are unforgiving, it's not just the recent regulation, right? Market itself will never forgive you for the mistakes you make. So we're very careful there, right? So that's
great.
But Mayan, you know, I think a couple of years ago, Suhaimi took over the mantle in Negara. He's a great guy to have on your side within the bank. I mean,
definitely.
yeah, you know, and I'm sure, you know, he's doing all he can to kind of.
Yeah.
It's just because it's jurisdictionally bound.
Correct.
That is the limitation, and you know, from a regulatory point of view, I think the market needs to understand that there is rightly actually there is a check and balance globally within jurisdictions, and jurisdictions come pariahs very quickly. And you know, and that's why having a jurisdiction like Malaysia, like Salim was talking about, so you have your onshore negara with Suhaimi, you know, pushing the mantle for you there, and then you have Labuan as shore. You actually have a bit of everything. That bodes very, very well for the startups and the fintechs. The issue with data is something that we struggle with as a regulator, as someone that brings potential licensees, the regulator, is something we struggle with. It's not a Malaysian issue necessarily, and it's definitely not based on PDPA or GDPR. It's very much about behavior. And really it is also about context. Because when you look at inclusion and you look at really reaching out, and I'm not going to talk about banking, I'm talking about InsurTech, for example. So we've got a potential InsurTech that's doing quick payouts for catastrophe losses in Indonesia. So the moment there's a flood, these rice farmers are going to get $100, which is for them huge amount. Now, in order to get to the data, these guys that are being funded by the Japanese or the World Bank Japanese subsection of the, you know, they have to go and put in rainwater collector thing, right? And this is a very interesting story. It's worth your while. So then they need to collect the data in order to come up with a risk profile, you know, embed it into the system in order to then issue out the cover in order to understand the risk. Blah. Now, what do these farmers do? They look at this collector and they think, oh my God, it's raining. This collector is going to get spoiled. We'll cover it. This is fundamentally an example of the challenges in collecting data that we know for a fact is happening with one of our potential license holders. You know, and it's not GDPR, it is the confluence of data and the underserved. And that has to somehow come together, if that makes any sense, for this to really work.
So I guess, Farah, the point that you're making, and that very similar point that Mayan raised, just that traditional banks possibly have lots of historical data, right? And the comfort they take from historical data is the fact that historical data, the little hiccups, the little mistakes that they've seen, they've overcome, and it's best to keep ourselves in this safe zone of depending on historical data. Test and proven to a certain extent. Whereas now, when we're looking at the digitization space or digitalization space, we are looking at behavioral, we're looking at profiling, we're looking at trending, right? Which I think at our conversation at Salim is that these, it's not that they're not proven, but they're very segment centric, where it is proven at the end of the day as to how profitable or how well it's being done. But I would like to take the approach that, as shared with everybody in a sense whereby, as we look at Malaysia, we are a entrepreneurial centric nation. Yeah, very, very, very different from our closest neighbor. They're very institutionalized at the end of the day, right? In Malaysia, we have lots of young entrepreneurs, and without having a product that allows them to overcome incorporating a company that needs to be running for 1 year before you can start getting a loan, you must perhaps mortgage your firstborn before you can get 100,000 from the bank. You know, overcoming this kind of hurdles perhaps would be the room where digital banking would start coming in to meet, and that perhaps will be the wave to increase in terms of increase, I guess, Malaysia to a higher salary bracket or high income bracket nation at the end of the day. So I guess we've got another 2 minutes or so. Any closing thoughts from anyone? I actually got a question from the floor, but I'm not sure if Mayin, you want to answer this.
Yeah, it's quite an interesting question, man.
Yeah. So to Dave Chu, if Mayin is caught up with an end, then I guess you can answer this. But anyway, is Green Packet going for digital banking license alone or with a consortium?
Yeah, so we'll go with the consortium actually.
So it's a watch and see space.
Yeah, that's all I can say for now. But we are very excited about this year and next. It's not because of the digital bank license only. We see movements in fintech finally in Malaysia, landing in Malaysia. Cloud service providers are behind us. I think the ecosystem is moving. People are playing together nicely right now, somewhat, because we want to move the nation. I hope to work more with the other players in the field for BigPay at the end of the day. Let's see how far Malaysia can go, and I'm really excited to see the next few years for fintech. Thanks to everyone.
Any closing thoughts from BigPay?
Yes, absolutely. So I think that it will be a very interesting time to see what consortiums actually end up going for it, and how Bank Negara will end up viewing these consortiums. So a bit of feedback. Are you okay to mute? Yeah, thank you. And I think in terms of the different segments that people, it'll be interesting to see how Bank Negara views the different segments. Are each expected to solve all the problems, or are they expected to solve some of the problems? I think it's the latter. I think most players are going after the latter, and I think it'll be very interesting to see the propositions that come out at the end of this and end of 2022. And how many of them are, I have an ecosystem I can distribute, or whether it's going to be something a bit more interesting than that. And what we see around, I think, the commercial space, I think, Jonathan, to your point on entrepreneurs, on SMEs as well, Farah, I think those are going to be the really, really interesting pieces, and especially those that can take that and enable the right financial infrastructure to give SMEs access not only to Malaysian markets and increase the demand, increase the supply curves, but also across and kind of just moving the entire demand curve by allowing financing infrastructure for the region and Malaysia to be at the center of that. I think those are going to be really going to be a space to watch. I think for BigPay, we're very excited about the digital banking license. I think you will hear some announcements about us in the next few weeks, and so we'll stay tuned. And thank you very much to the panelists and the audience for the time and the attention.
Farah, anything you want to close with?
How can I close with 2 scoops? You've got a scoop from BigPay, scoop from Packet.
Come to Labuan.
No, I mean, the digital space in Labuan is we're gonna launch our market report for 2020 the next month or so. The digital space has had more than 100% growth. I think the thing about Labuan is it's not Malaysian centric; it's regional, if not global. We enjoy this space. Change is not easy, but we enjoy this space. On the domestic front, I'm very curious to see 5 years on the road. The success of the digital bank under the Negara license vis-a-vis people or players who would prefer to just take a money license, or I think that is where it's going to be interesting to see, because I have seen so many FIs, financial institutions, crippled by regulation.
Yeah.
When you have that 4-letter word, bank.
Yeah.
Okay, and a lot of what fintechs want to do don't need that word.
Yeah.
Right. A lot of it is, I think Salim, you said it about earlier when we were having this chat about the PR angle. Oh, it's a bank, it's a bank. But actually, when you come down to it, to serve your clients, to get your monies in, you don't need a banking license necessarily. Okay. So I'm very curious in the next 3 years, to see, because there are certain other players that have been very conscious in not going for this license.
Yeah.
Right?
There is a number of players that I've been talking to as well. We'll have another conversation. Yes.
Yeah, it's like, no need, can we Labuan do like this, and then Malaysia we do like this, and then we patch it. Yeah, we patch it like because I'm always talking about my son's Lego set, right? We patch it like that. We build it. Yeah, absolutely. Do you need the 4-letter word? Is the question.
That's true.
Thank you for the opportunity.
Okay, thanks everyone for spending a good hour of your Sunday afternoon with us, and really appreciate all the thoughts and insight. Yeah, all the best to BigPay and Greenpacket and Kipple as well in the upcoming race to the digital banking license. Yep, exciting times. I think everyone, this is really a lot more positive, exciting times than us always venting about. And I think let's just keep everybody abreast as to what's going to be happening in the next couple of months. Yeah, thanks everyone.